Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, August the 27th, the year's 2024. Let's talk trading. What the Market Teaches, Part 2, with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal. Walmal, we had that one trader that wants us to, explain how we analyze the market and say, hey, conditions are changed and how we make adjustments.
Okay. That's a loaded question, but okay. There's a couple of things going on that you can look at. Now, when you go and say the markets have changed, we could go and look at this from a micro point of view or a macro point of view. Let's look at the macro side of it first. The overall, what's going on. And the overall, honestly, I almost don't give a rip about whether or not the market is going up. And that's me personally. I really don't care if the pound dollar is in a long-term, what some people call a trend, long-term upward movement, or a long-term downward movement. Right now we'd say upward because, over the last, couple of weeks at least, the pound has been going up on a pretty steady pace, and if you look at the daily chart, you can see that. So, I'm not a swing trader. I'm not a trader that goes out there and is looking to go into a trade on Monday, and I may get out tomorrow, but I also may not get out for 2-3 weeks. That's just not who I am. That's not how I trade. Some people do that and then can make a ton of money. In fact, I was pointing out last week, I believe it was, that when I first started with that first Fibonacci out on the chart, basically 2 years ago, I pointed out last week that you could have made literally hundreds and hundreds and hundreds of pips in each direction based off of that Fibonacci. You could have ran it all the way up like 300 or 400 pips, and you could have run it all the way down 300 or 400 pips, back up 300 or 400 pips. Could have been up, as much as 1,000 or 1,200 pips, but it also would have taken 2 years to go and do that. That's not who I am. That's not how I trade. I look to get into the market, make a few pips, get out of the market, and come back tomorrow for another dance. And that's just how I trade. So that's from a macro point of view. That's one type of trading. And how do you go and do that? Well, you do like what I just said. Maybe you put Fibonacci's on your screen. You certainly go and pay attention to what happens with all the, all the fundamental reports that come out, and you look to see and you pay attention to, which ones are actually moving the markets and which ones aren't, and you pay attention to, in statistics, one of the things that you're always taught, if you're a statistician, one of the things that you're always taught is that the numbers don't matter. The trend of the numbers is what matters. And the idea is that, just because, if I go and, I'm getting, let's say, numbers that are coming in 23, 24, and these are insignificant numbers. They got nothing to do with anything. I'm just making numbers up. But, 22, 14, 19, and then all of a sudden you get a number of 156. Well, that number of 156 doesn't mean anything, okay? Unless the next day after that is 140, the next day after that is 170, and all of a sudden you've got a new thing that is developed. And when you're a macro trader, that's what you care about. You need to go and actually go out there and pay attention. Has there been a significant change in the overall market that's happening out there? For instance, what you can do is you're looking at your smart ranges and you're looking at your daily ranges. And I've talked about this on I don't know how many videos, even though I don't use it that much, but I've talked about I don't know how many videos. The fact that 2 years ago, we consistently had 100 pips a day, on the pound dollar. There was this range of 100 pips per day, every day on the pound dollar. Now, it's somewhere between, literally 45 and 65 is really the range. I mean, you get days like today where you're above it.
Yeah, we're at 66 today.
Yeah. Yeah, exactly. Yesterday was 42. Friday was 144, but it was a big news day. The day before that was 53. And so there's obviously been a significant change in the market. And so how do you go and make that? That viewer, he was kind of asking, how do you know there's been a change? Well, look at some of the statistics that you usually use. Are the numbers that you usually use, are they changing? And obviously on the daily, they are changing. So how does that affect you? Well, if all of a sudden you're seeing numbers that are significantly muted as they are, well, maybe a reversal trade is not your best bet, right? Why? Because you're looking for, a trade to come 20 pips off the bottom if you're looking to go long, or 20 pips off the top if you're going to go short. If you only got 60 pips to work with, or like yesterday, only 40 pips to work with, there's not enough room. So obviously that type of trading is probably not the best for you. So you go and say, I need to go and change things up because it's just not going to work right now. Am I changing methodology? Yeah, I'm changing methodology, but I'm changing a methodology because the statistics is saying to change the methodology. I'm not changing the methodology because, quote unquote, it don't work. I'm changing it because there's a real factual reason to change it, and that's what we have to go and do, and that's what you have to do. And so a lot of you all know that I've changed. I was doing the Walmal method for literally, I don't know, a couple of years, and it was making me a lot of money. I don't do it anymore, and and part of the reason was because it was kind of interesting that what had happened was that prior to the days getting significantly crushed in terms of range, the hours were getting significantly crushed. When I trade, going back, 3-4 years ago, what was happening was your hourly range was always somewhere between 30 and 35, pips every hour. You had a range of that far. And then all of a sudden it dropped down to somewhere between, 10 and 15, maybe 20. And then if you remember, I started talking about, okay, this is not working because we're not getting enough of a range, because every hour for that method is a reset. You start all over again. So you're just not getting enough of a range to go and do it. So what did I do? I said, okay, I'm not going to go for 10 pips anymore. I'm going to go for 3 to 5 pips. And that worked, and that worked pretty well for a while. And then all of a sudden, it even got crushed even further. And what's interesting now is that, you look at the hourly ranges, like, today it's like, so far this hour, and we're almost 3/4 of the way through this hour, it only got 9 pip range, but the last hour was 18, the hour before that was 12, and then the hour before that was 21, and then we had a big hour of 30. But the problem is when you're doing this is that you need to have, to really go and use the Walmal method, you really need to have consistently, you need to go and have, at least 28 pips, preferably 30 or more pips, for a period of time. That's when that method works, and it works very, very well. So what do? You say, I need to go and look, maybe this is just not the best method for right now. Unless I just want to go literally pick up a pip or 2 pips, every hour.
Well,
now, if I'm trying to go ahead.
I was going to say something, one of the things that, I've talked about over the years, It's like some people, they have one method and then they try to apply it to everything they trade. But I took that a little step further and said, you know what? Here's a method. Let me find what instruments work best with this method.
Exactly.
And that's an analysis. So like if if traders, you've been watching these videos, I guess it was a couple of months ago, we looked at the Chinese US dollar pair because of the range. It was like, whoa, this looks like what the pound used to look like. Maybe we should think about trading this.
Right. Exactly. And that's, you're exactly right. Apply the method, and to go and make it successful. The methodology and the instrument both have got to go and be in sync with each other. And I could go and actually, I guarantee you that if we go out there and look, I could find a pair in FOREX that I can run the Walmal method against, and it would be successful. The problem, though, is I may have to go and trade at a time of day that is not suitable to my lifestyle. And what do I mean by that? When I'm awake to trade, I don't want to be getting up at 2:00 in the morning to trade, the pound yen. It would be it might very well be very successful with the pound yen, but I ain't going to do that.
Right.
I'm sorry, I'm not getting up at 2:00 in the morning.
Yeah.
Let somebody else do that.
Yeah.
So, go ahead.
I was going to ask you, we talked about range and looking at the smart range. What other metric would you suggest that the trader might want to look at in doing their analysis?
Believe it or not, that's the only one that matters to me.
Okay.
And the reason why is because it really comes down to very simply this. I only care about what the market is doing right now. Okay? And what I mean by that is I'm very, very short term. I'm not looking to get into a trade that extends out for hours. If I'm going to trade for more than 20 minutes, I'm losing a lot of money. Okay? Because I screwed up someplace and didn't get out when I should have gotten out with either a win or a loss. And that's the truth of the matter. So I don't really care that much. Now, that said, I may go and look at, and I do look at, the EMA 5, or indicator 2, as your indicator puts it up on the screen. Yeah, I know it's a squiggly line, but it does give me an indication of, hey, if I'm above it, the market has been going up. If I'm below the EMA 5, it means that recently the market has been going down. Again, why? Do I care about that? Because, again, I'm trading short term. I care about what's happening in the now. It's like, a perfect example of this, it would be, do you remember the strength meter that indicator that you wrote, which basically rated all the different, not pairs, but currencies? I said, which is the strongest currency?
Yeah, actually, I didn't write that one. I modified it.
Okay, I thought you had written it. Okay. But in any case, the reason why it doesn't matter to me very much is because that particular indicator, okay, is telling me things that happened over a longer period of time. It's not telling me what happened in the last 30 minutes, and for good reason, because it's trying to look at things over a period of time to get some type of sense where the market's going to go over a longer period of time.
And
sure you can go.
Speaking of time, we're fastest 15 minutes of trading's just about over. But I guess we'll have to come back with a part 3 or more of what the market teaches you. So hopefully we've answered some of that trader's questions. If not, feel free to ask again. And when you're trading, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One. Over and out.